The real problem for investing is that, if you look at Zimbabwe, you can be a bazillionaire and not be able to afford 3 eggs. There are over 4,800 currencies that no longer exist. So they push the markets up to hide the currency devaluation. And so you think you're in a bullish trend when things are going up, when in reality, it is a relentless negative trend in the value of that currency.
Yeah.
If a government can say this is money, they can also say this is not money. Can you do that with gold? Nope, you cannot do that with gold, because gold is used in every single sector of the global economy. You can have trillions and quadrillions, but if it will not buy you anything, what good does it do you?
Right.
And that's where good money gold comes in. It's got 6,000 years of history. And if you look at the Bank for International Settlements, the central bank or central bank, they did a report in 2020 on what position for gold in the reserves, in central bank reserves. And they made 4 points, and forgive me because I don't have these points in front of me, but that's a great read if you have the chance to do it. But one of the things that they did say is that gold is the proven inflation hedge. It also is, I'm not saying it in their terms, but the only flight to safety asset through geopolitical turmoil, because it is the only financial asset that runs 0 counterparty risk. So you hold it and you own it outright. Everything else is counterparty risk. And my favorite one is gold held at home runs no geopolitical risk. So even though I can't guarantee tomorrow, when something's happened over 4,800 times, 100% of the time, my guess is it will happen again. And the reason is because gold and silver, both physical, but physical, not on paper, have the broadest base of functionality in the global markets. So there's always demand. 100% of the time there's demand, sometimes more, sometimes less, but there's always demand. It's never, ever, ever gone to 0. What else is there that can say that? Nothing. Absolutely nothing. So your best shot, in my opinion, and so this is where I put by far the lion's share of my wealth, is in gold and silver as real money. Plus, look what the central banks are doing. I mean, who knows more about all of this money and what they're doing to destroy it than central banks, right? I mean, that's easy enough. And what are they doing? They are loading up on more gold through the 3rd quarter. We don't have the 4th quarter numbers yet, but they have bought more gold in 2022 than ever since they started tracking central bank gold holdings, ever. So if the central banks are doing it, why aren't you? We're already in the reset, and that really did start in 2008. And you saw what happened to their balance sheets with quantitative easing and forward guidance. So we're going to tell the markets what we're going to do so that they can get into the position to benefit from it. And by the way, look at the corporate profits, because clearly the large corporations are far more important than the little individuals. So I contend, without a doubt in my mind, that we are already in the reset because of those few tools that they actually have, right? They have interest rates to regulate the rate and speed of inflation. So if they want more, they drop interest rates down and it inspires people to borrow and spend, as we've seen. If they want less, then they raise interest rates up, which is what they're attempting to do now, so fewer people borrow and spend. What the rapid inflation does is it starts to erode the confidence. And as you so rightly pointed out, you know, we have a lot of generations that have never experienced it. That's one of the reasons why I love being 68, because I was like 17. I was in my late teens, really, in the 70s or in the 60s and the 70s. So I remember that. Did I understand what's happening? No, I did not understand what was happening at that time. And I would have had a $20 bill in my pocket in July of 1971. And maybe I even had a brand new $20 bill in my pocket in September of 1971. And if you look at those two bills, they are almost identical because they know they got to keep things appearing as close to normal as possible to get adoption. So I'm personally very grateful to have had the opportunity to live through that period of time because I don't have that normalcy bias. And plus I read all of this stuff from the IMF and the BIS and all these guys. So I really do understand what they're saying, and I watch what they're doing. That was the other assumption, and that's the assumption that most people make, is that they want things to keep going and keep going. But if you're out of tools for the old system, don't you need to create a new system to transition us into? And so my contention is that from 2008 to today, they have been wallpapering over the issues. I mean, they're bigger than they were back in 2007, 2008, the derivatives. The way the central banks are going to sell the CBDCs is that there will be no inflation. If we give them that power, there will be no inflation. No, it'll be deflation. Because as they say in every document that I ever read about this, once everything is digital and in their control, there is no limit to how low they can push negative rates. And they'll have their finger, I mean, these are their, I'm not quoting, but this is what they say, not me, but they can have their finger on that economic button constantly and tweak it constantly to get the outcome that they want. So if you look at how all assets performed last year, you have gold and silver that were a little bit above even from the start of the year. You got the dollar that was up against other currencies. See, that's how they get you. Oh, the dollar is strong. Well, the dollar's so strong, it should buy more, right? And it doesn't buy more because inflation, it buys a lot less because it's going away.